On weekdays in Singapore, many happy new owners of the Tesla Model 3 pick up their cars in the Tesla Service Center in Toa Payoh, Lorong 8. Beneath all of this is a company called Firmus Capital that owns the land and the building behind Tesla's service center, their first service center in Southeast Asia. Today, I'm going to talk about a private equity real estate investment firm called Firmus Capital, together with their CEO, Kiat. Now, I want to call this up front that many of you know I invest mainly in growth stocks, like Tesla, because I am comfortable with the higher returns and the higher risk that comes with it. So this isn't for everyone, but this could be an option for some of you. I know some members in the Tesla Singapore community who invest in this. It's also an indirect way of getting closer to Tesla. Imagine being a co-owner of the land that the Tesla Service Center is based in. It's a historic moment, and history is being built in this building. But Firmus Capital is a lot more than just owning the land that Tesla Service Center is in. So today, I'm going to talk with Kiat about his story, his vision for the company, and his experience working with Tesla. As we begin, I also want to share the audience that this is not a paid endorsement, and I reserve the final rights on what gets published in this video. Kiat, tell us more about yourself.
My name is Kiat. I'm CEO of Firmus Capital. Firmus Capital, we are a private equity firm. We invest in private equity real estate. You may ask, what is private equity real estate,
Yes.
right? So I would actually look at that as being what we do in simplistic terms are we buy real estate, we add value to it, and out there adding value, we sell and we book the profit. So, and the profit goes to investors.
And this is a new world for many of us. Like many of us may own our own homes, so we're kind of like property owners, but companies like this actually own a collection of properties. So we're going to dive a little bit more, talk about that in the rest of this video. And Kiat, it's an honor having you with us, especially for the first time doing this. I understand it's not easy to share your story. Thank you for being open here. We're now here in Kiat's office having a tea chat. And we've got an amazing view in the background. Kiat, tell us a little bit more about what we're seeing out this window.
Oh, actually, so this view is Shenton Way. So, as you looked out there, the Tanjong Pagar docks will be redeveloped one day in the new master plan. This is going to be a whole new area. Overlooking here is Asia Square, and there will be lots more mixed development coming out in this corridor. So it'll be a whole exciting area, having a view into the future. It's like 20 years time, it will be skyline over as far as you can see, right?
This is Singapore's Central Business District, and a slightly older part, like the original part of the Central Business District, that's being redeveloped. A lot of changes are happening in Singapore. So the next time you visit, you see this background, you know where you are. So Kiat, tell us about how you got started into the real estate investment industry.
I've started my career in research, actually, in economics research, but with a focus on real estate. Then I got into funds management. Into the REIT sector, listed a REIT in Singapore. And thereafter, did private equity in the private equity real estate space. Started Firmus Capital Partners, which was a more entrepreneurial kind of venture that was also private equity real estate about 10 years ago. Then everything has history, and then Firmus came about in 2017. It's a fairly young company, but I've been in business for a long while.
There's a long history here. So you've spent about 17 years in, I'll say, investment real estate industry.
Yeah.
For those of us who are so new to private equity, like most of the audience will understand stocks. These are publicly traded companies. Private equity has a lot less owners. Can you describe it a little bit more to us?
Yeah. Okay. Well, I guess private equity is a lot more mystical to a lot of people because it is not so well understood versus a REIT. Like everyone would know a REIT because it's so widely publicized, right? But nonetheless, I guess the difference between a REIT and private equity is that a REIT has liquidity,
Yes.
whereas private equity is there's a defined period of investment.
Yes.
Or it could be also open-ended. But the key differentiating factor would be usually in private equity real estate, you actually participate the whole value chain.
Okay.
Where you participate on the upside, meaning you get whatever return that you get from the asset.
Yes.
As we add value and as we exceed by selling the investment, you get the full outcome of the value that is being realized.
Yes.
Versus a REIT is holding to perpetuity, you get a very stable income generation as a coupon. Well, I guess that would probably give you a little bit of a simplistic perspective of what a REIT and private equity is about, right?
Thank you. To build on that, so real estate investment trust, it's kind of like it's open to most retail investors. You can buy as little or as much as you want. You got $1,000, you can begin already. Whereas for private equity, there definitely is a minimum capital investment requirement. That's why not that many people know about it. And it also often has a holding period, like you mentioned. We are there in the whole life cycle. Typically, most people hold in private equity, you hold the capital there for about 5, 7, sometimes even 8 years.
Yeah.
So, who is private equity real estate investment for? Like, is it for the really wealthy people? What's your take?
No, I think everyone should have private equity in their diversified portfolio. Given the return that we are actually getting from private equity is we're seeking alpha, right? So we're seeking a return that is above market. So I guess, in that regard, in anyone's diversified portfolio, they should have allocation to alternative investments like private equity.
Imagine right now, someone has $1 million and they come to you and say, Kiat, how should I split my $1 million between the real estate investment trust and private equity?
Right.
What's your advice?
Well, if I'm going to be biased, of course, you should allocate a lot higher into private equity real estate. But I guess you should look at your needs and how you would balance your portfolio. Everyone should have some REIT investment because that gives you stable distribution. But at the same time, you need to have allocation to private equity like us because you need to beat inflation, right? So I guess being able to achieve higher return than market, right, would give you that edge in beating inflation. As you know, we could be going to a period of inflation where underlying inflation is high.
Yes.
So I guess that's something for consideration.
Yes.
Right.
I've made the mistake many years of just keeping cash in the bank, and that is definitely not the right thing to do. And what would you say would be the typical range of returns for private equity real estate firms?
So we look at the strategy that we employ. From core. In our in our world, we've got core investments which are very stable, long return kind of asset class.
Yeah.
To value add and opportunistic. So on the extreme spectrum, right, we're talking about a return on anything from between 7 to in excess of 20%.
Wow.
So there's a range of it. Of course, with the risk and return ratio that we work with within the different strategies that we employ.
Very clear. And every investor has the opportunity to make the call on the right level of risk and returns. Another big difference between real estate investment trusts and private equity is real estate investment trust, you can almost trade it. You can really go in and out. There's lot more liquidity. Whereas for private equity, it is a long-term commitment, a longer-term commitment. You're there for a longer-term journey. You do get potentially higher returns, but you've got to invest in money that you don't need tomorrow or next week or next year. It's something that you're willing to hold on for a longer time period. That's the perception that many get. What's your take?
Yes, you are right in that sense because we usually work on a typical commitment period, investment period, which is committed to a period of the fund life,
Yes.
they call it. So it ranges from 5 years. It's typical to have 5 years to 7 year fund life. in a lot of private equity real estate funds. But within that time, there is no safe liquidity. Unlike REIT, you cannot trade it instantly. But in this day and age, the secondaries, the real estate secondaries market for private equity is getting more developed, and there is space for that. We are actually also looking at other options like tokenization as a form of liquidity window.
Okay.
Those are things that are evolving, and we could see this space being reinvented.
Can you tell us a bit more about tokenization? Like, is it kind of like splitting one stock into multiple small parts? How will you describe it?
So, tokenization is, in a very simple way, it's a different instrument. Instead of issuing shares.
Yeah.
So the tokens are ledgers, so to speak. They are using ledgers which are has got the integrity of non being replicable.
Yes.
So if you use that from a real estate perspective, that would they like to call that the democratization of real estate, because it's a fractional ownership. You can actually parcel ownership structure of, let's say, a piece of real estate into multiple pieces which are like tiles. So you look at it as tile, from one tile, it can be broken into 100 small pieces of tiles to make the same tile, right? So that is the construct of tokenization. So coming back to my point is that a secondaries in private equity real estate is that we could actually trade that secondaries probably using tokenization.
I see.
Yeah.
And I think this liberates, in your words, like democratizes the investment industry. There's a perception today that if I want to get into private equity, I need $500,000. So with all these new developments, so what is the minimum entry point to start investing, say with Firmus Capital?
We take in investments of 200,000 minimum investment size. So but there are some which we have got very low allocation because of the size of the deals is smaller. We do break it down. So long as the investors qualify as an accredited investor.
Yes.
If they are non-institutionals.
Got it.
Yeah.
So you have a combination of institutional and also accredited investors. In Singapore, the definition of a accredited investor has you need to meet one of three criteria: annual income of at least 300,000 Sing dollars, $2 million in total assets including your home, or $1 million in financial assets.
Yes. So it's either of the three.
Yes.
Yes.
So when someone invests in a private equity, they place a lot of trust in the fund managers because this is a long-term relationship. What made you decide to start a company, and what decisions and criteria did you think about before starting Firmus Capital?
Yeah, so that is I guess that's the entrepreneur side of me, that I always wanted to venture out, not working for an institution, but bringing forward the space of private equity, because it's quite dominated by larger players.
Yes.
I guess I would want something that I would like. When we first started off, we wanted to do something homegrown, which is Singapore based. And there were not many Asian players then, but of course things have gradually changed, and the landscape is getting more crowded, I guess.
Is there a minimum capital requirement? Like, okay, to start one, you need a minimum capital pool of 5 million, 10 million. How does it work in this part of the world?
So the minimum capital in terms of the fund.
Yes.
Yeah, unfortunately, real estate, private equity real estate, it's pretty capital intensive, right? So we typically, we started off, with family office and club deals.
Okay.
And that would set us right in the perspective of, how we started off there, because the requirement of capital was that it was almost impossible to go and raise a blind pool fund without a track record on its own. So we had to build that up from and build up the track record first. That's how we started. Yeah.
And how much would you say that range would typically begin for most PE firms? Like 25 million, 50 million?
Yeah, I think you need to get to 100 million.
100 million. Okay.
As a starting point. Yeah.
And starting any new company, it definitely relies on also credibility, your reputation in the industry, especially when you just started off. There's no track record yet.
Yeah.
Was that the case for Firmus Capital's foundation?
Very much so. Very much so. We were unknown. But we had the benefit. I had the benefit of coming from Firmus Capital, which I was a co-founder of. I think that helped a little bit. But then again, it was still tough. But we're getting there. Yeah. With the right support of the stakeholders, shareholders. Yeah.
So Kiat, you've been in the industry for 17 years. What has changed?
Oh, wow. So, yeah, a lot have changed in the last 17 years, I guess. There's a lot of disruptors in the economy. EV is one of them, right?
Yes.
Yeah. But for real estate, we have seen disruptors happening, especially in the in the discretionary retail space. You look at how the way people buy has changed. But then again, the way people buy that is different today has also given opportunity where there's a rise of asset classes which were not prevalent about 20 years ago. For instance, data centers, last mile logistics. These are things that are changing. And even, we're seeing in our non-discretionary malls that the F&B sector has got last mile logistics in a way that they are where the last mile drop point from the cloud kitchen or the central kitchen that they send off to distribution points which are located in malls because they need to get to their customers which are 15 minutes drive radius. So these are changes that we have seen that's happening. In the office space, in the commercial office, we've seen a lot of more rise of co-working, right?
Yes.
So the rise of co-working has set forth the different kind of settings that are in place. The requirements for usage is also different, right? So, and in the industrial space, as I mentioned previously, you've got data centers, you've got last mile logistics, and these are things that are changes that's happening right now in the industry. Yeah.
So a lot of structural changes as society changes.
Yeah.
You mentioned data centers. Singapore has a lot of data centers.
Yeah.
It's trying to be. In the old days, Singapore was a physical hub, a physical port. The government now wants to make it a digital hub, a digital port for the 21st century. And in the theme of changes, the past 2 years have introduced a lot of changes because of COVID. There's been a lot of disruption. There's some winners, there's some losers, but safe to say that everyone's habits has changed. What do you say COVID's changes in the real estate industry, especially as it comes to different asset types or different properties like commercial, logistics, residential? How has demand shifted as people started working from home more, as there's more e-commerce?
Okay, maybe let's start with home, right?
Yes.
So if you look at how has this evolved? I guess suddenly because of COVID, you work from home, so everyone is a co-worker. So you be co-working with your child, your children, at home, right?
Yes.
So and your wife or kids or family members, they're all co-workers. So naturally, people start to think, I need more space, or I need to readapt my space at home to be more usable and functional for this kind of environment. And going forward, is this going to be a new format of working? Well, I guess people are used to a more flexible kind of working environment, and then with the utilization of technology, I guess it may become some features, but I don't think it will replace the humanization aspect, where you still need an interaction. You need that to build culture. You need that to build what it is for an office environment to gel, right? I guess that is not doable just offline. So at some point in time, there will have to be a mix of all that.
Agreed.
Right. So, coming back to what you mentioned, so what happens to the office? I think we talked about this hybrid.
And we see news like, let's say in New York City, office rental prices have dropped.
Yeah.
Whereas in the suburbs, rental prices have went up. A lot of tech workers, like knowledge workers, they go to suburbs. So there's been an adjustment and a seismic shift in just property valuation and also land use.
Yeah, yeah. So that hinges on the hybrid working environment. People are in decentralized location because of they don't want a conversion or risk that if something happens in one location and then it decimates the whole office. So that's why you have a decentralized office. In other in locations which are non-CBD, you've got decentralized offices, and people do take office space, and occupation has actually vacancy has dropped. Occupancy has risen as a consequence of that. So we do see that kind of phenomenon happening.
If we look at all of these changes in the industry, how does this impact the way that Firmus Capital operates, especially in the post-COVID world?
Yeah, so I guess for us, we have to be forward-looking and adaptable in terms of being able to sense the trend and look at this trend and how do we readapt our space. In this regard, we have got office. We are invested in offices. We've got office in Australia, and we've got malls in Australia and here. And how do we adapt that users in light of what's happened? So our malls have always been non-discretionary.
Okay.
So it is based by supermarkets and the daily need necessity, and catering to that. With the rise of COVID, then what has changed? Yeah, I guess there are space which has been readapted to fulfilling that last mile journey. So omni-channels that is evolving, and how that takes the delivery of the goods to its end customers on that perspective, on that stage, on the last leg. For the offices, we have always operated. We have seen that takeout space, even in light of COVID, people are not really giving out space en masse.
I see.
Right, and it's more of adapting to their needs. People may be scaling off or right sizing.
Yes.
In terms of the office requirements.
Or even in the past, having just one central office, let's say in downtown Singapore, maybe having 3 smaller hub offices across Singapore.
Yeah, you're right. I mean, we do see that happening in Australia, where people are actually having 2 or 3 locations. And in the past, where people moved to centralization, now they're moving back towards that model.
And how does this shift things for you? Will you consider then, say, more but smaller properties rather than having large concentrated properties?
Yeah, so in that regard, right, we look at it, actually, the measurement is the workspace ratio.
Okay.
Right. So has actually workspace ratio reduced in light of COVID? It hasn't. It actually increased.
Interesting.
Because you need distancing, right?
So
with distancing, in a typical office that could usually pack in the past 30 max, 30 packs can now probably fit 20, right? So that where does the other 10 go to? They either don't come to office or they need to have another place for their working environment.
Yes.
So that's what's happening.
Clear. Yeah. Earlier, as we talked about the founding of Firmus Capital, and you mentioned large players industry, One of the larger players in the industry is Mapletree Private Equity Real Estate Investment. And they've been known in the industry for many years. They do provide good returns also. How does Firmus Capital differentiate yourself? Is it only returns, or what else do investors look at?
I guess the differentiating factor, I guess, is the partnership approach that we take with our investors, and the more humanized touch that we have the relationship with our investors. That would be, I think, the differentiating factor. Since we are smaller, we're much smaller, I guess we are also more nimble in that sense. We're able to react to opportunities a lot quicker. So, for instance, Tesla deal, is one instance. Why didn't he go to the big boys, right? It's because we were able to adapt and react quicker to the market, and that works well for us, and our investors are rewarded, I guess.
Nimbleness, and second one being that you're able to give a little bit more of a personal touch. Right. The other thing also is there are some companies that say, I think an airline in another country, they say, we are number 2, therefore we're hungrier to serve you better. How does that resonate with Firmus Capital?
That resonates with us because naturally, as being smaller, we would look at things differently, and we will always be hungrier for deals. Yeah. Survival, right?
Yes.
Yeah.
And it's definitely a less corporate interaction with a small organization. A lot less forms, SOPs, and robots, hopefully. And some people like that.
Yeah. The whole notion of being nimble is because of, I guess, it's a lot flatter. It's not. When there's a lot flatter, there's a lot less bureaucracy, and guess our ability to react will be quicker. So I think that's a differentiating factor as well, in us.
And now, talking about the industry, top of mind for many investors is China's second largest property developer, Evergrande. They've been in the news a lot. People are curious, what impact does that and all the developments with Evergrande have on the broader real estate industry? Do you see it being confined only to China, or does it even impact your business in Singapore and Australia? And how does it change the way that Firmus Capital operates?
Well, I guess Evergrande, I guess, is the perceived elephant in the room, right? So I guess now I think the aftermath or the actually impact of Evergrande is not really fully felt yet. It's not really played out in a way that because there's no major cross default has happened. Now, however,
that's good.
Yeah. So, but given that said, I'm not crystal balling and saying that may never happen. You put that into perspective, a lot of that debt is in China, right? There is also a significant US dollar denominated debt which sits outside of China. So, but I think the financial market should be able to withstand that.
Okay.
But I think the fallout that may be greater that is not seen yet is that if there is there will be a disruption to the market in terms of the supply chain. I think if there is a default and suppliers don't get paid, or the subcon falls, the subcon goes bust, and there's a lot of other supporting industries that is affected. I think that's something that people don't think about and don't see so evidently, but I think the impact could be great in that regard because there's a real disruption in the overall economy.
Yes. Yeah. So what I'm hearing is that everything that's happening at Evergrande is still playing out, and nobody can truly predict the future. What changes or impact does it have for your company?
Yep. So the impact on us is that if there is a non-orderly disruption to the market, then the cost of financing may naturally rise because the perception of risk, right?
Yes.
That the market is pricing in all these factors will rise. But it will impact our investment because cost of funds, cost of financing rises. It will have a negative impact. Yeah,
it's true. And talking about financing, so earlier this year, Tesla accepted Bitcoin as payment for their cars. Would you see any real estate investment firms accepting cryptocurrency in the future? What's happening there?
Yeah, so I think the moving away from fiat money is taking shape. I'm not here to profess and say that that would overcome or overtake fiat money immediately.
Yes.
But I think it's a progression that is happening in the marketplace, and I don't see that being an issue if we can get comfortable with the KYC AML provision. I think that's something that is doable.
So Kiat, tell us about how your journey with Tesla started.
I guess it started from our partners in Australia. We as you know, we have a presence in Australia as well.
Yes.
Quite a big presence there. And when Tesla wanted to enter the Singapore market, I think we were there. Being there and being their real estate partner made a lot of difference in coming to the Singapore market, which is quite foreign in that sense. Being able to hold the relationship with, to provide a one-stop solution, being a real estate partner to not only bring them into the market but provide a one-stop solution. I think that is valued by them in terms of dealing with the top authorities, providing the space and speccing it up to their requirement. That I think, and I hope that it is something that is of value now, to them. Yeah.
So walk us through that journey, like the moment you got the introduction from your contacts in Australia. Like, how was the journey? Did it happen very quickly over a couple of weeks? Was it drawn out? Tell us a little bit more about that story.
Yeah, so I guess that it was pretty swift. They are quite focused.
Okay.
And the firm was super excited when we were landed this opportunity to build their first integrated showroom and operating center in Singapore, which is the point of difference for them because they are not represented in this region. They are in North Asia and Australia, and this is where the center of activity will be taking place. We went through a round of looking at the various opportunities that is available in Singapore and zooming in on the right opportunity and the right location where they want to be.
Yes.
And also the right spec. I think that was interesting. But at the back of their mind, I think they know what they want. That's an easy start. So in a lot of this build to suit, it is easier if the specification is already, they know what they want.
I see.
Right? So we built, in this case, we readapted the space to meet their requirements. Of course, the requirements is, it's also very different. It's not available in the local market, right? Because EV is new.
Yeah.
So how do we get the skill sets that is needed to fulfill this? I think that's a challenge, and we overcome that. Our tech team, our asset team has done a great job, I think. And it's a partnership approach that we took with Tesla, and we have been very, they have been very supportive of us.
And it's publicly reported that Tesla signed a 20-year lease for the service center in Toa Payoh.
Yeah.
So that's a pretty big commitment and a very big decision, especially for their first major location in Southeast Asia. And I also believe it's publicly reported that there will be R&D, not just a service center, there'll be R&D, there'll be showroom as well. Can you tell us a little bit more about the location? What's going to be there?
Yeah, I think that speaks volume in terms of their commitment to Singapore, in terms of their committing to develop this space, the EV market here and also beyond. I was told, they look at this as an integrated facility where it is not just a distribution, it's a showroom as well. It has a showroom capability, and it has got like offices where they, I think what they call it, their center of competence. Yeah. So it's an integrated facility, I would say, that serves not only Singapore, but I guess it will be for the region too. So the location of this is quite unique. If you look at where the location sits, it's right smack in the middle of Singapore.
Yes.
Right in the center. So that's where they desire to be, because it's accessibility to CTE coming out from the highway.
Yeah.
Yeah.
And it's very near my home. Just a couple of streets away from where I live.
Right.
Also, Tesla globally is a strategy of trying to move away just from like downtown prime locations into just more suburb areas. Because for Tesla, again, demand's not the problem. It's really production. Yeah, they've got enough demand with the Hertz deal last week for 100,000 Tesla Model 3s. More deals are coming. Some people who want to order a Tesla Model 3 in markets in the US have to wait until July to get their car. Can you imagine waiting 8 months for a car from any other car brand? Not a supercar, but a car that many people can run. It's such a big, high-profile customer. It's also a great, interesting partner to work with. What did your team learn from working at Tesla?
Well, I think the learning and takeaway is finding new innovative ideas.
Okay.
Of doing things. Looking at things in a different perspective, they say readapting this, what we have in this building alone, what we make do of what we have, and transform that into a use that is of use to them. I think of the tenant, that itself is takes a bit of creativity, right? Then of course came multiple requests from investors and people asking us, can we get discount?
Yeah.
To also, can we get allocation for the Tesla tequila?
Yeah.
Which Elon Musk has just launched, right? And it's not available in the market. So it was interesting. Not that we can fulfill any of that, but there were always many multiple questions that people ask. We get asked about this, all the time.
And some employees are also Tesla fans, so it must be quite a perk working in Firmus Capital to work with a company like Tesla.
Yeah, it is. Given that they are high in terms of, I think, at the peak of level of innovation from a EV, in globally ranked probably one, right? And you've got the SpaceX. I guess those are things that would feature greatly in everyone's mind, even mine, right? So, well, I guess Elon Musk would push our imagination even further, right?
And not only that, Tesla is not just a leader in EVs. Elon Musk expects the energy business to be bigger than your car business. Then, they are also an AI leader with full self-driving. One day, Tesla bots, you could see some Tesla bots walking around Singapore. So there's a lot more to do with Tesla, and I think it opens up a lot of opportunities for Firmus Capital. Yeah. And this is a customer that's going to grow at rapid speed. So it sounds like having that first start gives you better understanding. And also not just with Tesla, because every other automaker is going to be EV first now. Hyundai, Ford, Volkswagen. What are your sentiments there?
Yeah, I think that the EV market has got lots of legs. I guess everyone is looking or working towards reducing carbon footprint, and the EV space is by and large one of the easier ones to adopt or implement, because there's so many of these cars on the road, right?
Yes.
And if you can reduce 10% or even 20% of it, it does make a difference. That's just my view of things. I think, I guess and if the government's in the region implement that. I guess that's something that it opens up a lot of opportunities for a lot of these EV players in the region.
So on this topic, sustainability is becoming more important for both institutional and retail investors. How does Firmus Capital try to tap into this important value for investors today?
We have, even before Tesla, the deal, we have always looked at sustainability as an important issue within the firm. In our buildings that we own in our portfolio, we have always are very conscious of how we utilize energy. So, for instance, like in Australia, our buildings are neighbours rated. So it's like the platinum, gold, or platinum, the gold or platinum standards here in Singapore, right?
When you say neighbors rated, for those of us who are not familiar with it, what does it mean? Like, it means your neighbors are super happy with the building?
Yeah. So it sounds like neighbors, but it's actually NABER. NABER.
Okay.
Neighbors. So it actually stands for an acronym for the rating for the energy usage, among others. So the higher rating would give you a better efficient use of energy, for instance. So we constantly try to improve that.
Okay.
So as your energy usage, energy efficiency of using energy is improved, you're actually helping the environment by not, your utilization of fossil fuel burn would be less, like, So if you can make a difference, if all the can you imagine if all the buildings in the city have got very high rating,
Yes.
right, and you manage to reduce the utilization of energy to generate the same output by 10%. So that's actually 10% reduction, right?
Agree.
Right. So so we look at sustainability issues like that quite closely, and also we look at how the way we consume things as well. That is also important, and we try to consume less, or we try to increase our recyclability of stuff, especially materials that we use.
Got it.
For
So
building
the
materials.
building materials.
Yes. So those are things that are close to us. Like, for instance, when we did an AEI, AEI means improvement of significant improvement by doing all the renovation works. We actually sort of almost redeveloped a shopping center that we own in Australia.
Got it.
So we look at materials and putting in materials that are environmental friendly, sustainable, and those are our small contribution to sustainability and the greater good. Trying to reduce carbon print.
Thanks for sharing that. When I hear you talk about the ratings, I think the picture in many of the consumers' minds would be like those 4 tick or 5 ticks you see in the fridges or air cons in an electronics store, like a Best Denki or a Quartz. Get the more ticks, and this is happening for buildings as well.
Yes.
Tesla is well known for also trying to drive the expansion of solar energy. Australia too. Australia can be one of the world's largest solar, not just generation markets, but even export markets. Singapore is trying to build an undersea cable to basically bring solar energy from North Australia to Singapore and the rest of Southeast Asia. So on solar, do you see a role for your properties or for Firmus Capital where there could be solar panels helping a little, or it's not practical for your assets?
No, so actually it's not new. Solar panels, we have investigated a lot of that in Australia as well, because we own quite a few shopping centres, and the roof of the shopping centres, they're quite flat.
Yes.
And those are areas that we can actually install solar panels on, and those solar panels can actually plug into the grid, or they can actually self-powered for the use in the building. So those are things that we constantly look at, and these days solar panels have advanced as well in terms of the technology,
Yes.
And also same goes as storage, right?
Yes.
I mean, the batteries have also advanced in technology, so we've come a long way. Yeah.
Agree. Tesla has helped build the Hornsdale Power Reserve in Australia, and nowadays the cost of solar has went down. And not only that, you can actually even sell your excess energy, almost turning it into an income generating source on our buildings as well. I could ask to get this question since we talk so much about Tesla. What car do you drive, and when will it be a Tesla?
Yeah, okay. When will it be a Tesla? I think I drive a non EV now, which
Yes.
is an Audi. But I'm actually looking forward to the Y actually,
Okay.
the Model Y. So I was told that sometime next year. Yeah, I'm actually looking forward to that. Yeah.
Many people are looking forward to the Tesla Model Y, which is Tesla's compact SUV. It is believed that orders would start by end of this year, and we should see first deliveries by early next year. So you're going to see a lot more Teslas on the road as we come to a close. So Kiat, what's your vision for what you want Firmus Capital to be known for 5 years from now?
Well, I guess right now we have footprint here in Singapore and in Australia. Naturally, we are looking to expand more in this region. The Asia Pacific region is focused, North Asia.
North Asia.
Yeah, but I guess we're not limiting ourselves to what's the opportunities that's presenting itself elsewhere in other geographies, in other jurisdictions.
Mm-hmm.
We've seen quite a lot of deals. I mean, opportunities that are very interesting in Europe. Well, so I guess that's something that we're looking to also expand on our footprint. Being an Asian kind of grown funds company, and expand into geographies like that and grow with our investors and partners.
Just like how people need to grow every day, companies, organizations need to grow as well to constantly find new challenges, solve new problems. So thank you for sharing your stories, your perspectives with us, and thank you for shedding a light to this very, I'll say, small, darker world of private equity. It is not something that a lot of us are familiar with. I had to do so much research before this interview, and I can tell you I'm still quite confused at times. So I've learned a lot from you, and we appreciate this opportunity for you to tell us this story. So I'm wondering, one day, could we, with also Tesla's permission, get a tour, a look of the Tesla Service Center in full glory?
Right. Yeah, I think that's something that I can ask. I guess it's a it's a delivery center. I guess it's to some way open to public, especially for delivery of cars.
Yes.
At least you will get to see the showroom and the gallery that's there.
Yeah. Maybe not every part, but definitely some of the public parts together.
Correct.
It's good to see basically your baby growing up, right? Fully complete when it's open in the coming months. I'm very excited to check it out as well. So with this, there has been a lot of hopefully more light shed to you on private equity real estate investment. This is not for everyone, but this could be an option for some of us. Just as we think about investing, we should always consider what are the next best viable alternatives. And our risk appetite, our financial situation changes over time. So I'll put a link down in the description below for you to learn a little bit more about Firmus Capital. Thank you for watching this episode. If you found this insightful and useful, please click the like button. Hit subscribe to stay updated to more interviews like this. Thank you for watching. Stay safe.